Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobis. Big mile-high news that kicked off a lot of NFL news this week was that Peyton Manning, quarterback for 14 years in Indianapolis, was going to the Denver Broncos. Yes, we have Hall of Famer John Elway, who's, of course, working with the Broncos, and owner Philip Anschutz, hiring Peyton Manning. That means that Tim Tebow, last year's sensation, is out, and Tebow is flying to New York to go with the Jets, who already had a quarterback, Mark Sanchez, and of course an outspoken coach in Rex Ryan. And then down in New Orleans, the news is very bad about Sean Payton, suspended effective April 1st for 1 year from coaching the Saints, putting the Saints in a very precarious position for next year. Who do they hire? What will the person's role be? But all this news, take it together, and it's good news for Nike. Nike, of course, is the company that is going to have the jersey contract for the NFL next year. This means with all these new quarterbacks, Tebow in New York, you got Manning in Denver, you got 18 out there, probably a new 15 you got to make here in New York. Nike could be making out pretty well. The stock has already made out quite well since Christmas. Look at this. This thing has just been on a stairway to heaven right here. 110 bucks per share right now, up from about 93 around Christmas time. A heck of a run in Nike. Nike reports earnings on Thursday. For the full year, analysts expect 12.5% growth in earnings per share, 15.7% growth in revenues. And the PE, 22.4 times what's expected for this entire 2012. So right now you've got the PE higher than the growth rate. Nike not looking like a cheap stock, but one that you cannot disrespect the momentum of. Look at that run, just phenomenal, still above the 10-day average. Also of interest on Wednesday are oil and gas stocks. Oil shot up on a news that inventories were a little bit higher in the U.S. than expected. Energy has been pushing higher since October 3rd when this recovery began, more or less, in stocks. We have a guy out in San Diego named Peter Way. He does a newsletter for us called Block Traders Oil and Gold Monitor. He also does one called Block Traders ETF Forecast. What he does, he looks at institutional traders and he is able to find out what they're doing from their footprints in the options market, and he's able to ascertain what their forecasts are for a range of securities and commodities contracts. Here's the crude oil contract from today. This is the upper end of their forecasts, going above about $130, $140 per share on the high end, but never below about 88. 3 years out on the low end. The forecast is a little bit higher than it is right here, right now. But Peter also looks at stocks and he ranks them according to risk and return. Higher return, higher risk. What you want is something way out here and way low, like number 22 or 19 or 9. Let's check out a couple of those guys right here. Comstock Resources, a company out of Texas, very small, less than $1 billion in market capitalization. He's got an $18.80 target. Way's theory is he wants to get into and out of stocks with the odds that he's seen with his block traders. So his target on CRK, 1880. He's looking at Quicksilver Resources, that's KWK. Target there is 691. You're below $6 right now, in fact, 564. And Cabot Oil and Gas. This company doubled in value in 2011. Looking for $39.09 out of this stock. It's at $33.50. Cabot, of course, a big oil and gas player. Here are some big oil companies, the major integrated ones, Exxon, and companies that dig it, companies that refine it, companies that sell it. Again, you want to have something that's far over here and low, so high reward, low risk. 8 looks pretty good. You got IMO and PTR. Let's check those out. IMO, that's Imperial Oil. Imperial is at 45 bucks, and he's looking for 49.70. Not a huge move, but that is 10%. So look at a little IMO, Imperial Oil. You've got PetroChina, one of the state-owned oil companies in China. PTR is the ticker symbol there. Peter Way is looking for $160. Basically, you're at 147-ish, so you got some good upside as well there, nearly 10% in that stock. President Obama today going out to Nevada, Boulder City. You ever go up to Boulder City near the dam? Beautiful place. Largest solar installation in the world right there. President is speaking there on the day that the Commerce Department put penalties on China, different Chinese solar companies for unfair trade practices. And China is a very big producer of photovoltaics, the things that go on the outside of these solar panels. In any case, so the U.S. announced levies against Chinese companies that were lower than really a lot of people expected. But the bad news for the Chinese guys is that they actually happened. So nobody was happy about this one. First Solar, U.S. solar manufacturer out in Arizona, down 4.5% today. SunPower, about 4.5% down. They are a U.S.-based company, has a little investment from Total, the French company. But you go over to China and you see some real devastation. Look at this, Yingli Green Energy, YGE, down 10% today. Horrible stuff. SunTech Power, you're talking about it, 8.7% down today. So solar stocks at some point will be bouncing here, but the fundamentals are not looking very good, and government subsidies are drying up. So maybe you're better off going with Tebow and going with Nike.